Hey, what's up, everybody? It is Wednesday, February 12th. All right, I sent out my weekly EIA Petroleum Status Report analysis. If you want to get a copy of that, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. That report did not look so hot. I know we have oil up today, and we're positioned long in oil. Commercials have been aggressive buyers down here in the 50 handle, so we're up above 51. But that report was not a good report. It wasn't just about the increase in crude inventories, which was a big build of 7.5 million. You had a very marginal drawdown in gasoline. You had a draw in distillate, which is good. But that was about the only positive thing in the report, because we saw deep pullbacks in gasoline demand, in distillate demand, and in exports. Now, exports I've been focused on to see if there's any indication of weakness externally, that is outside the U.S. That would be reflected in exports. And we did see a pretty significant contraction in crude exports and refined product exports. So this could be, that could be the first indication, because I've been saying in the last 4 weeks, we've seen a pickup in product demand, we've seen good exports, so that could be the first. And I said, so far, the data is not really corroborating all these hysterical reports of slowdown because of the coronavirus, but now we did see something in this EIA report, which at least I would say raises a cautionary flag. Did crude sell off today? No. And I think partially the reason, there's two reasons for that. Number one, we have a surging stock market today, and I'll get to that in a minute. But number two, Russia is still undecided on whether they will go along with additional output cuts. So I think the market is waiting for that. And again, I will reiterate that commercial entities in the petroleum markets have been aggressive buyers. They were aggressive sellers up at 59, 60 bucks, 61. They were selling all up there. We got short. They've been buying down here. So, you really don't want to go against those guys. They're very savvy when it comes to their own industry and what's happening. They got the pulse on the market, on the oil markets. That's their business. They know better than any speculator. They know better than any line on a chart. I'm not saying it's going back up to 60. As a matter of fact, if it got back up to 57, I would expect to see the commercials as heavy, heavy sellers up there. But we have to wait and see. If Russia says okay on additional output cuts, then I think you could see this thing spike higher. But that they still haven't decided. Stock market up today on, of course, more headline trading. Hey, the coronavirus has peaked. Look, I will say this, the stock market rally at this stage has become highly speculative. It's stretched, it's extreme. It's still, I would say, as I mentioned yesterday, the fiscal flows are still tilting, leaning more positive than negative, but those flows, as I've been talking about now for a couple of weeks, they're getting very close to an inflection point where the tax flows will exceed the spending flows, and then you're having a net drain of income from the economy. So that's very important. And also, it could very well be that we'll see it in the latest banking data, a resumption in the decline in loans and leases and the deceleration there, because of anticipated, or at least in the second half of this month, let's put it for the second half of this month, the anticipated buildup in bank reserves, because this is the biggest Treasury spending month, February, because you have all your normal outlays, plus you have, this is the month when you see the most IRS tax refunds go out, over 100 billion just in tax refunds going out, and you have a quarterly interest payment which would be something like 40, 50 billion. So last February was a 530 billion spending month, and this is going to be bigger. So that's reserve addition. Now, I want to talk about the dollar. You know, dollar index back up over 99 today. Look, if you look at that, and somebody asked me about Forex. I mean, if you really step back and look at some perspective, and if you look at a long-term chart of the dollar index, let's take that as a proxy for the dollar. If you want to talk about individual currencies, we can. I mean, I know the euro today hit a new 3-year low, but it's well off its lows from that we hit, what was it, in 2017? I think we got down to 104 euro against the dollar. We're just around 109, 108 and change. But if you look at the dollar index and the rally we have had since February, March 2018, let's call it the last 2 years, it's up about 12.5%. And I mean, if you look at the dollar index over the course of the last, 4 or 5 decades, that's down, and it's been trending down, and that is simple macroeconomics. I mean, that is the United States runs large trade deficits, runs large budget deficits. This is macroeconomics 101. The dollar is in a downtrend. We had a 2-year now 12.5% rally in the dollar index. If you look at some individual currencies, like for example, the British pound is well above where it was with the first Brexit vote in 2016. The Canadian dollar is higher than where it was over a year ago. The Mexican peso is higher than where it was since 2017, 2016, 2017. A bunch of currencies. So if you want to look at them individually, even the Turkish lira, okay, is a lot higher, and this is with a recent sell-off that we've had over the last couple of months. Turkish lira is even higher than where it was, what was it, in 2015, 2016, when the United States first started hitting it with the sanctions. What was it, 2017? So you got to look individually. The Japanese yen is much higher than where it was a year or two ago, all right, even 3 years ago. Much higher than where it was. So, I mean, you got to look at these individually, but if we take the dollar index as a proxy, and we're back up here around 99, and it's kind of meandering. A month or two ago it was down in the 96 handle. A month ago it was down in the 96 handle. Now we're back up in the 99. You can go back over a year, we're about 90, it was in the 98s. So not a lot of movement. And if you look at the big picture, that 12.5% rally in the dollar that we had over the last 2 years from 2018, if you look at it compared to prior big up moves in that macro downtrend, this move of 12.5% was nothing. I mean, in the mid to late 1990s and the early 2000s, I mean, you had a huge move based on real fundamentals. I mean, that was the Clinton. He ran a surplus. The trade balance went from deficit to surplus. So you had the two main balances going from deficit to surplus. That was a positive development. And the dollar could have really been ripe for a long-term sustained rally. But then we had the recession in 2001, and everything went back into deficit. The trade deficit resumed, the budget deficit, Bush ran the budget deficit way up. It wasn't his fault, of course, because automatic stabilizers kicking in. So I look at the dollar in a long-term downtrend. I'm not bothered by a 12.5% rally over the last 2 years. It's really, really minor, very, very insignificant. I mean, if you look at it really micro and you're staring at it every day or every week and you think, wow, the dollar index is at 99 and the euro's at 109 and, the British pound's at 129 and the yen's at 110 or whatever, you say, wow, these have been tremendous moves and the dollar is so strong and it's king dollar, but it's not. It's not. I mean, this is far from being king dollar. And if you look at the big picture, which sometimes it is very, very instructive to step back and look at the big picture, what do you see? Lower highs and lower lows over a 50-year period. And that's not going to change. It'll only change when the United States flips around to running trade surpluses and budget surpluses. That may never happen. I mean, it might happen. It looks like that's anyway the goal, certainly of Trump, because he thinks like we got to get that money, right? We got to get that money, not understanding that we get the goods, they get our paper dollars. It's like, we win in that sense, but like, you can't expect really a businessman. You should expect somebody to understand that, but they don't. Anyway, so that's the update for today. Go to my website, pitbulleconomics.com. Remember, I am the only one who has an applied approach to MMT. I take the concepts and understandings of MMT and apply them to trading and investing. See everybody tomorrow. Bye-bye.